Hey, this is Lacey, your Las Vegas gal, coming to you live this Sunday amidst Corona apocalypse. That's what I've decided to start calling this. I am going to be here with my good friend Amber Coleman. I'm going to bring her up now, and I'm hoping that you guys can see both of us. We're still figuring out our new system here, but we are both excited, and we want to make sure that we can showcase to you what's really going on, and really some new information that we just got about an hour ago. So we are basically, just learning that the Federal Reserve has lowered the interest rate to like 0.25 or 0% for many, many banks. So I thought it would be a good idea to bring on Amber Coleman to talk about what this means for the Las Vegas Valley, just the community of Las Vegas, and for those of you who are thinking about buying a house here, what it means for you too. So Amber, I'm going to bring you up on the screen, full screen. Feel free to take it away, and then we'll take questions from you as we keep moving. So please go into the comments and add questions. We will definitely be answering. Hey, Amber.
Hey, how's it going?
Good. I think we can hear you okay. Let's see her.
Can you hear me okay right
Yeah,
now?
you're a little muffled, but yeah, I would definitely, you're good. I think we're good.
Okay, I'll move closer so I'm not muffled.
Cool.
Okay.
What does this mean, Amber? What does this mean?
With the Fed, okay, so I think it's best to first explain what happened last week with the market too.
Okay.
And as far as the interest rates go, because what we usually look at when we're following interest rates is the 10-year bond. So last week, the 10-year bond was going down, but by Tuesday of last week, the banks raised the rates. By Thursday, they were up over 1% from where they were before. So what we were used to looking at, the banks weren't following that anymore. Everybody has kind of their own predictions as to why that happened or whatever, but with the Feds dropping the rates, usually people will think, well, that means that our rates are going to get dropped. The Fed's rates are short-term rates. So what banks offer on short terms, like one of them was home equity lines of credit, those kind of things will go down. But the mortgage rates, they're actually they actually depend on different things, and it's more the perception of the stock market that it depends on. However, last week everything was in such a different place that what I'm hoping happen as of Monday is it kind of goes back to what we're usually looking at for mortgage rates, and then we see better rates. Does that make sense?
Yeah, I think that does make sense. And I think that, it is important to have you explain the history and kind of how we got here. I'm trying to figure out how to get both of us on camera at once, and I'm failing. So I'm going to pop back and forth.
No.
That's okay. I'm going to pop back and forth between the two of us until I can figure it out. I did it once. I'm just going to try to figure it out again. But as I was saying, I think it's important that we do explain what the heck happened before and where we're going now, because at the end of the day, like a lot of people, I know my phone's been blowing up since this was announced an hour ago, and I know yours has too.
Yeah.
A lot of people assume, oh my God, this means that we are going to get a 0% home loan on our house. We're ready to buy, Lacey. Let's go. And I'm like, whoa. That's not what this means. So giving us the backstory of what's been happening is really important. Let's talk about what's going to happen this week, or what we hope will happen.
Well, and I've had people call me too with when they make announcements like this. So the last time they dropped the Fed rates a week and a half ago, asking, well, I'm going to wait till it gets down to 1%. The banks won't lower them down to 1% because they still have to make bills to be able to keep their doors open. So
yes.
To get them that low, huh?
Yes, I agree. Yes, that's the message. So make sure everybody heard it. Say it again.
Even when we were in the downturn of the economy, we didn't see rates get that low because the banks have to make their bills to be able to keep their doors open, and they're not going to do anything where they're not going to make a profit on it.
Right.
So to wait for 1% is probably waiting for something that you won't see. And that's my opinion. I don't make the rates. But this week when we saw them hitting, like when they were getting towards the 2s, we saw the banks put like an immediate halt on the rates and raise them up until things got kind of situated. And we'll see tomorrow if they're actually situated to where they want to be. So that's when we'll kind of see, okay, where are the rates going to lie? Does that make sense?
It does make sense. So, and again, I'm still trying to figure out the split screen. So right now you just get to see my face. That's okay. We'll pop back and forth. This is a new system we're using, guys, so just hang in there. But A lot of people have been reaching out to me saying, you know, like, so what if we want to refinance? What if we want to go live? Like they're just desperate to know more. So what's your recommendation for someone who's in the position of like possibly wanting to refinance or possibly wanting to lock in a rate or start to buy? Obviously, we don't want everybody calling you first thing Monday morning because you're going to still be determining what's going on. What's your recommendation for that process and the best way to go about getting in touch so that they can go into a queue of some sort so you know who to call when it's time?
Well, what I've been telling people to do, because I really do think that we're going to see like record lows. I just don't know when. Because remember, it takes the banks a little bit, and it takes the market a little bit to catch up on how things are gonna lie when these kind of things happen. When the feds lower the rates, it doesn't happen just like automatically the next day. So what I've been telling people to do is just get set up in our system so that I can, when it comes time and when we see the rates where they're at. And what I found out last week is that in this kind of volatile market, and I know, you know, the anxieties are high everywhere right now, we need to just be able to be ready to lock in fast. So when we see that the market hits the level of where we're needing it to hit, then we just need to be ready to lock it in quickly. Because like last week, it jumped within hours. It was crazy what
Yeah.
happened last week.
Yeah, and I think, you know, it's funny because we did 2 or 3 videos just talking about, you know, hurry up, now's the time to buy, now's the time to buy. And by the time our third or second video that we went out with came out, it was already jumping that rate right back up. So people need to understand when we say hurry, that means hurry, but we also, or if this is not a fire sale, we're not trying to encourage you to make decisions that aren't healthy for your plans in your life. We're just trying to make sure that you're aware of what's up so you can strike while the iron's hot. Amber, let me pop into these questions over here if that's okay with you for a moment. Is that cool?
Yeah, of course.
Cool. So a couple of people are saying, you know, everybody's saying hi, hi, hi. Thank you so much for putting out some Las Vegas information. The hospitality industry is definitely going to be negatively affected. I know we've seen some people posting about that. Got a couple of questions related to refinancing. So I've got somebody here that says, hi, Aaron. It says, I live in Washington State and I have a HELOC, home equity line of credit. I have a 4.79 interest rate. How much lower could my interest rate go realistically if I wanted to refinance?
Well, okay, so on the HELOC, those rates are going to automatically go down right now because HELOCs fluctuate with what the feds, with the index rates, and that's what the feds mess with when they're lowering the rates. So right now, that HELOC will go down 0.5%. However, if you try to switch that, refinance that home equity so that you're not on the adjustable mortgage, and you try to put that into a fixed rate mortgage so that you have a little bit more stability, I'm hoping to see low rates, but I can't quote rates right now because, like I said, they were crazy last week, and we're hoping that they go down. Where they were before they jumped up on Tuesday, Wednesday, and Thursday of last week was they were starting to hit the high 2s, low 3s, depending on the type of loan that you did. So hopefully they'll go down right then, or hopefully they'll go down there again on Monday. We just don't know right now.
Got it.
This just happens.
Yes. Okay. Thank you. Thank you. I'm putting the questions that they're asking actually up on top of the screen so people can read it and know what we're talking about. This is a nice feature. I'm excited about this. Somebody's asking, does this going to affect your ability to refinance an auto loan if you can?
You know what? I have no idea on that one, only because I don't work in the auto world, so I don't know exactly how those rates. I would think that it did because these are more short-term rates that when the Fed drops rate, it affects short-term rates. So I would think that it affects auto, but I'm actually not sure what the auto finance companies base their rates on. But that's a good question.
Very good question. Very good questions. And I encourage you to continue to, put your questions in the comments. We'll do our best to answer them. Amber, I'm still sorry. I can't figure out how to do this split screen. So again, it's just me all day and then it goes to you all day. So own the sunlight when it comes your way, my friend. But is there anything that you're scared of with this new conversation that's happening in the new reduction of rates? Is there anything that makes you nervous just as a personal investor in this industry, in the real estate market, and in Las Vegas?
Well, I mean, of course, this weekend I had to kind of come to grips with the fears. I know any of us, when we're going into the grocery stores, it can kind of put a panic mode on us. But where my head goes back to is I'll go, because I've been doing this a long time and in the industry for a long time, and when I see the feds do the same things the feds did in 2008, that's where I go back to. The difference in 2008 is the crash happened because of a bunch of false loans being put out. So like what happened before the crash happened is that and I used to tell people this, if you're breathing, you can get a loan. And if you want 3 investment properties, you could get that too without having to qualify, because they literally had mortgage loans that were stated income, stated assets, no doc loans, anything out there. So when the crash happened, we had all kinds of false loans out there that caused our economy to go in a spiral for a very long time. So what I have to remember is this is very, very different than what happened back there, even though some of the things that are happening with the Fed and such are similar to what they did back then, only they're acting right now. And I feel like this is going to be a short-term thing until we get, control of what's happening and get back to, what we usually do. Does that make sense?
That makes perfect sense. Thank you for being so honest and open. I know that, there's been a lot of people, screaming recession is coming for a couple of months now. And, it's sad because, I don't know that anybody really knows what the future holds. We're not oracles. We don't have like a crystal ball, but, we're doing our best to positively look to the future, to prepare our clients and ourselves for what's to come. And obviously nobody's really ever thinking about some sort of a pandemic, which is what they continue to call this coronavirus. So for us, we're just kind of doing our best. I'm not playing into the recession hype. I know that there are some major events happening here in Vegas with a lot of the casinos closing their doors and laying off staff to accommodate for what's happening. But at the end of the day, we have to continue to forge forward. It's business as usual for the real estate market because we've got foreign investors pouring their money into the city right now because that's where they want to park their money in real estate in the United States while everything kind of blows over. So I don't know, are you seeing a lot of calls from investors? I know a lot of them bring cash, but has there been any discussion with your team about that?
About investors?
Yes.
There's been a couple investors that I've talked to since then. And to be honest with you, this is the time when they all jump in. While everybody's fearing and has got their minds on other things, they jump in, swoop in, and then, buy when they could buy. So yeah, I've had a couple of phone calls. I'm expecting to be a lot more here pretty soon, especially with the rates, with the rate talk that's happening right now. So I'll keep you in tune on that.
Yes.
If
cool.
It's just happening, time will tell on that kind of stuff. Yeah.
Exactly. We've got a few people asking about that 20K program that we've been talking about for a few months. Do you know where that stands right now as far as the the budget and the money that's been allotted towards that?
From what I hear on the program from calling the company that is sponsoring the program is that the $20,000 is going to last through the end of the month. So we could reserve funds through the end of March on it, and they still have money to do that. I don't know that they're going to extend it. They haven't announced that yet. I've heard rumor that they might extend it through April, but so far it's just through the end of March that it's available to. And from what I've understood, it was harder to find houses in those areas. You see that there's a few more houses in those areas right now?
Yeah, actually, we're seeing. So just so you guys know, if you're watching this video, the the $20,000 grant program is actually limited to certain zip codes in Las Vegas, and it's the hardest hit zip codes in our city from the previous issues that we had from the recession. So this is the effort to bring people back into those communities. They are not bad neighborhoods. They're not bad zip codes. They're just zip codes that were hit really hard during that recession time. So I've been putting out videos, zip code tours, specifically videos that are specific to that program on purpose. We are seeing quite a few new listings pop up, but it only has been out for about a month. So we're still kind of watching people decide if they want to put their house on the market. Putting your house on the market is not something you just, decide today and it's done tomorrow. There's a little bit of work that goes into it. So it creates a little bit of a delay when we go to tell those homeowners, hey, did you know there's this program available? Maybe you want to sell your house now. And then they think, well, let me think about it. And then a week later goes by, the money's starting to dwindle. So it's been an interesting conversation with both homeowners and home buyers to try to make them match up a little bit. But we are in the position of contacting people directly to make sure that they are interested in, or they're aware of what's going on from a selling standpoint, and then trying to piece together deals with buyers and sellers, even if the house is not on the market. So it's a harder sell, longer process, but it is something we're doing for those of us who really want to live in a specific zip code and want to take advantage of that. So something to, oh look, my dog's in the corner there. Something to keep in mind as we move forward that, we are definitely looking at those zip codes. We're watching them closely. When anytime something new pops up, we're letting our clients know. And there's a lot of buzz around it because it's a really great deal. So I want to make sure everybody knows that's still available right now. We're still showing homes. We were out today and out yesterday, and I'm going out tomorrow to show homes. This coronavirus isn't stopping us. It's business as usual for the real estate industry and specifically for Las Vegas because we are not going to bed. We're not backing down. The city is very strong and we will survive. That's how I feel. All right, Amber, let me look here real quick and see if I can, let's see. Okay, we've got a couple other questions here. We've got, oh, let me see. Goodness. There's people looking around 275. They're saying that, are there any good deals within 89123? Yes is the answer. If any of you guys want to know, what's really specific to this area of, pardon me, this industry, this market in Las Vegas, I'm going to go ahead and paste a link in our comments, and it's also in the description of this video. So feel free to click the link. You can always contact me or Amber through that link. We'll be in touch with you immediately. This is time-sensitive information, especially if you want to be considered for any kind of a refinance or if you want to take advantage and stay on top of those new rates as they start to lower, hopefully. Amber, any other I guess, pieces of advice or moments that you want to share with us as to what you're looking for and what you're anticipating as we move forward?
Any other pieces of advice?
Yeah.
I would just say with the volatility right now, if you're thinking about it, call now, let's talk now, and let's talk about locking.
Yep.
Like there are programs that you can lock in rates and then shop for a house.
Yep.
So it's called a lock and shop. So because of the volatility that's happening, once there's stuff announced like this kind of thing, what usually happens is the stock market likes it. So then we'll start seeing like maybe the bottom tomorrow, and then it'll start going up depending on the other news that's being released too, though. So what I would say is if it's something that you like the rate, you can lock in a rate and then start shopping on certain programs.
Got it.
So we can look at those kind of programs for you, depending on how the rates look tomorrow. Or I can kind of, what I was thinking about doing is just put videos together to kind of help you see here's where the market is right now. Here's what it's doing right now, because literally it's like a roller coaster ride every day. It's crazy.
Yeah. And I think,
but I mean, it's crazy in every industry and every field right now with what's happening.
Yeah. And I think having your ducks in a row definitely is a moment that like we need to be aware of and we need to be really paying attention to. Having those ducks in a row, like you said, calling us in advance, just getting your stuff set up so that when it's ready to go, you're ready to go and there's no delay, I think the best piece of advice out of all of this. All right, let me go over here and see if I can find us. Let's see. We've got a couple of totally dig the older areas and they have nice RV parking. Yes, they do. Some of the older areas. Somebody says, do you recommend refinancing for a lower rate? We currently have a conventional loan at 4.65. What do you think, Amber?
Yes, if your rate's at 4.65 and the market does go back to you where you could refinance at the low rates that we saw at the beginning of last week or the week before, by all means, because you could save a lot of money on it. So the one thing that I'll look at when we're looking at a refinance is I'll never try to tell somebody to refinance just because the rates are lower. I'm going to look to see what the cost of it is, because remember, there's always going to be a cost to a refinance. You have title fees, you have taxes, you have insurance, you have appraisal fees. You have stuff like that. So we're going to look and see what the cost is and what you can save on it. And if you can make up the savings in a matter of a couple of years, then it's a really good time to do that. When your rate's at 4.625, and if the rates go back down to the low threes, then the rate's such a difference that you're going to be able to save quite a bit of money. So yes, it's a good idea to do it if that's where your rate is. If you're at like 3.5, and the rates are, like closer to the low threes, probably not so much because the savings won't be very good compared to the cost of the loan. That's
good advice. Thank you for that. JT says, the situation won't stop my dream of buying a home in Las Vegas. I hope my trip doesn't get canceled. I hope that too, JT. We've been hoping and praying. We've been waiting for you to come out here for a long time, okay? Let's see. Let me see. Okay, so I'm not really seeing any other big questions. I really appreciate everybody hopping on with us. And Amber, as always, thank you so much for being here for us and being such a wealth of knowledge for our our people and the people that want to know more. Thank you for that.
Oh, you're welcome. Thank you for having me. I appreciate it.
Cool. All right, everybody. So we're going to sign off. Quick one for you tonight. If you have questions, if you have concerns, if you're sad, if you're scared, if you're anxious, we'd love to help with that. So feel free to reach out. There's a link in the description of this video if you're joining us later and you didn't get a chance to come on live. There's also a link in our comments section. Once you fill that link out, one of our team members will be in touch with you to schedule a quick call, and we will get to the bottom of your questions, your concerns, your worries. I mean, even if you just want a friend to talk to, we're here. We're here for you. So don't stop dreaming of Vegas. That's my message to you. Don't stop thinking that this might be your future or your final place to move to and to build the next chapter of your life. We're here for you. We want to make sure that you know that. We don't have all the answers, but what we do know is that, it's only going to get better, right? At some point it might dip, it might go worse, it might get horrible, but it's always going to be an uphill swing at some point in time, especially as it relates to real estate. Real estate is a long-term investment. It is not something that you should be getting in and out of on a daily or monthly or annual basis. You really should be investing your money to let it sit for a minute and mature with the market as it goes. When you do that, it avoids this action and it gets rid of all the up and down, and it allows you to just watch it. It may go down a minute, but it's allowing you to look at the long term and watch it continue to rise. So we'll continue to hop on with updates as we see them, and we want to give you the take on Vegas because we know that many of you who are watching are considering making Vegas home someday. So we look forward to hearing from you. Click the link below. Otherwise, I'm going to sign off on my screen. Nice talking to you. Lacey, your Las Vegas gal here, and I'll switch over to you, Amber, so you can wave goodbye.
Bye, guys. I stay safe out there. I'm sure that I'm just like what Lacey said. I'm sure this is a temporary thing, and we'll see our ups and downs go by. But I'm hoping for a quick recovery for everybody, and that we can all get back to life as usual. If you have any questions, feel free to call me at any time. Or Lacey. I mean, again, we're just here to be a friend. If you just need somebody to talk things through, sometimes it helps just to talk it through. So.
Thank you, Amber. As always, we love you. Sending you lots of neon love from our favorite city in the whole world, Las Vegas. Talk to you guys soon and take care.